Alright folks, welcome back. This is an example of using the ICT breaker and optimal trade entry in a bullish scenario. I'll give you a chance to take a look at the price action, see if you can find a bullish breaker and an optimal trade entry. When you're ready, unpause the video. Okay, so we're looking at the 9th of October. And you have a low, high, and low. Now it doesn't look so obvious here on a 15-minute time frame, but we're going to drop down to a 5-minute chart and you can see the breaker there. And here's the optimal trade entry. So I'll add the annotations. Bullish breaker, bullish optimal trade entry into the London open kill zone. So this is a time of day we like to see price create a higher low, and if the market is bullish, and I'll zoom out and I'll show you why it was bullish. If you've been following anything on this YouTube channel, you'll see very quickly what made this pair bullish at this time, and it has to do with these levels here, but we'll zoom out in a moment. But I'm going to add the fib so you can see the optimal trade entry. Alright, so we have the low to the high, 62% retracement level, 79% retracement level. Extend that in time. There's your optimal trade entry with the overlap of the time of day, London open. And we have a projected high at 0.72431, and it's above this level here, which I'll show you again when we zoom out. And the high on this price swing comes in at 7.243 and 2. So really close. Went one pip beyond, and then has since traded lower. So I want to zoom out and let you see. If you recall the previous video I did when we were talking about Australian dollar, I mentioned these equal lows here. Price created that run there, and it left these relative equal highs. So buy side liquidity, we were resting above that. Also, if you keep going to the left, there's equal highs over here. So that's what that other level is. I'll let you see it so it's a little clearer. So go forward, and the price creates that optimal trade entry with bullish breaker projected up to here. And take that off, and we're going to drop down to a 5-minute chart. Alright, so here's that low, the high, and low. So you're going to use the up close candle prior to the swing lower, creating a lower low on this price structure. That is a run on the sell side liquidity. If price goes above it and trades back down to it, this can act as bullishness. But then we have an optimal trade entry, which is the low to high, trades down into it with the kill zone. There's where your trade is, and then it runs to that 72.43.2, and there's that price run all the way up to there. Okay, so there's the structure in the Australian dollar running to the buy side liquidity, and then up here as well. Time of day entry, low of day, expansion with bullishness, attacking the draw on liquidity, which is the buy side liquidity, after it ran the equal lows down here. Okay, so you can see both patterns, the optimal trade entry and bearish breaker that led to this run here, then set up a new price run to the buy side liquidity here with a bullish optimal trade entry and a bullish breaker. So combining two patterns to get precision elements reaching for liquidity pools above relative equal highs. I hope you found this insightful. Until next time, I wish you good luck and good trading.